Joining us today, the legendary technical analyst and founder of Momentum Structural Analysis, Michael Oliver, the man who called the 1987 crash, nailed silver's breakout to triple digits, and now sees silver rocketing into an entirely new reality. He's uber bullish, silver potentially hitting 300 to 500 an ounce by summer, driven by massive structural momentum shifts, bond market cracks, and a historic rotation out of paper assets. And yes, he called that jiggle in the middle correction that we saw, but a much higher level, shaking out the weak hands before the real fireworks begin. We're gonna get to the bottom of what's happening in gold and silver today, if it's the last thing I do. Michael Oliver, welcome. Let's get right into it. How are you doing?
I'm doing fine, Daniela.
I was saying offline to you how I was at the Vancouver conference focused on gold and silver. Everyone was so happy and there was such excitement in the room, but I knew in the depths of my soul, I could feel it coming. And I didn't want to burst anyone's bubble,
No.
but I knew that smackdown in gold and silver was going to hit. It hit. And I kept thinking about you and jiggle in the middle. Is it just a jiggle or gonna be something much bigger here?
It came sooner than we expected. We have various reasons, I probably talked about in the last show, of why we think this move in silver, the bell rang in the close of November for us, meaning that's where the point of massive acceleration was likely to occur. So December would be month one, January month two. In hindsight, looking back at various markets who've undergone similar things, quite often these surges, and there's reasons for this in silver as well, are spent in a couple quarters, either side of a couple quarters, 5 months, 7 months, something like that, where you see the massive move that it's going to make done quickly. Oh, there might be some more later, but that's not the point. The point is the massive surge, the rebirth to a new reality for silver. Well, we're only month two into it. In the last day of that month, we had a huge collapse. Came a little sooner than we expected. We kind of thought maybe late February, early March, and it was deeper than expected. But in hindsight, when I go back and I look at a lot of my momentum charts, again, you can look at price if you want, that's fine. But when you look at momentum, often you get a different picture. And that pullback made a lot of sense, actually, where it went to, both on gold and silver. And lo and behold, that was the low so far that occurred Monday morning. The following, it was a day and a half collapse, really. It was the last day of last month and then the first day of this month. But we got to certain levels on silver and gold, which made sort of sense. Oh, they pulled back to there. Oh, that makes sense. Yes, it was dramatic to get there. Since then, we've gelled. We've had up and down action. And frankly, where the rally peaked so far this week, up above 90 bucks in silver, made some sense too. And then we pull back from there. So we've more or less set a structure, so to speak. One, we held a key long-term support level, actually an intermediate term support level, 3-month average on silver to the penny. Okay, we hit that on Monday, and we came back and retested today. If you take it out a little bit, it doesn't bother us. But that was an interesting area to stop at because we have not seen that rising moving average, a 3-month average, which is not a common tool. We use it. We've not seen that in since like 8, 9 months in silver. So, I mean, it hasn't even come back down and kissed that rising average. So it made some sense to us. Okay, that's step one. What we're looking for now is some gelling action. No, I don't think we're going to go zapping back to the high within weeks. I think it may take more like much of February to work our way back up to restabilize a lot of expectations as well, but to restabilize the market and generate some buy signals on the way back up based on short-term metrics. And those numbers are set. For instance, you don't want to, if you're a bear, you do not want to wander back up late this week and into next week into the upper 80s again on silver. We were up to over 90 the other day. So you don't want to go back up there again. If you do, then it's over. You're going back up, okay? And I think that's about to happen. But again, I don't think it's an explosion back to the high. I could be surprised. I think it's more like an arm wrestling match to get back up there, and probably by March, then you're challenging the highs again, and which game on again, in other words. That would have been your midpoint jiggle. And I still think that the likely massive percent of any gain we're going to see, and again, I think it could be in the couple to several $100s on silver easily. I don't have a precise number. Will occur by early summer. So,
You put that range between 300 to 500.
yeah, like
correct?
6 months. If you start November and you count the months, you got
Right.
Jan, Feb, March, April, May, June, okay? Give or take a month, okay? These same type of events, this explosive couple quarter surge, also occurred for silver back in 79 to 80 when it went to 50 bucks. In 5 months, you quadrupled silver in 5 months to get to 50. Again, that was within that old reality of 50-buck highs. And then
Right.
again in 2010 and 11, there was a last surge of a multi-year bull market in silver, where in September 2010 through April 2011, silver doubled in half, okay, in 7 months, so 5 months, 7 months, either side of a couple quarters. And we could find this behavior pattern in other markets, and I mentioned this last time, but we won't reiterate that. But right now, I think, one, yes, the correction is either over or largely over. Two, it won't take much to put a real thumbs up on this situation, like, okay, we're going back up. I don't think the back up means rapidly. I think it could be arm wrestling. That's fine. But by March, if we have a stable February, which so far I think we're going to see, then by March you should be back at your highs. And at that point you go ballistic. Except this time you will have shaken out a ton of people and created massive amount of doubt, which is great. You
Shook out the weekends.
Yeah, and you want the doubt because when you get these kind of price surges, you don't want everybody on board from month 1 through 6. You want them to come on board in month 5 and 6. You follow me? Where everybody says, I gotta be there, and they join in late. That's
But you want them to join and stick. You want them to join in for the long term.
Well, the long term could. There's so many big events out there that are going on right now. The stock market, I believe, is topic. Right now, I do believe the stock market is yet to make its high. I know there's been a lot of selling pressure on the S&P just below 7,000, for example. I think you're likely to pop through that and get a big cheer from the crowds. It won't be much. It's underperforming gold and the silver, even with their pullback. If you go back 4 or 5 months and look where gold and silver are versus, and look at the S&P where it was 4 or 5 months ago, it's sideways.
Do you think there was anything nefarious behind the silver move?
Could be. I know there's something been nefarious for the last 50 years, or especially the last decade or so, to cap it again at 50. So the old reality was going to prevail. Well, it didn't. Okay, so whoever thought they could cap it with whatever instruments they used didn't work. And even now on the pullback, it's still not back to 50. Okay, so any attempt to control a market, to control reality with factors that aren't part of reality, manipulation, in other words, ultimately fails, because reality always wins in the end. And the longer you restrain reality from doing what it might otherwise have done, then the more compression you've built into that market. In the case of silver, catching up to a price level that would be reflective of, for example, the decay in the money unit, or reflective of what gold has done for 50 years, meaning higher and higher highs, not capped off for 50 years. But, you know, when you look at silver and you see a 50-year range, $4 to 50, $4 to 50. And yet other markets during that same time didn't stop at the 1980 high, didn't stop at the 2011 high. Look what copper did for decades. You know, I've mentioned this before, 50 cents to $1.50 for decades and decades. When it broke through in a couple quarters, it went to $4.50. It's back in 2006. Lead did the same thing in 2007. Gold, the mama market of the monetary metals, has not restrained by the 1980 high, nor the 2011 high, where silver was. Why? It just doesn't make any sense. If copper can blast into highs above a multi-decade range, why can't silver? Well, it reeks of manipulation. The question now is, did this break occur that way? Could be. It could also be to late comers who came in, because see, our buy signals at MSA were approaching $35 last June, coming back up towards some highs it had made before, above 35. We said expects acceleration. Well, okay, $35 accelerated. Then the next signal was that November close. And that was when silver broke out versus gold. And it said, hey, I'm coming back to reality. I'm too cheap compared to you, Mama Metal. I'm going to join you. And so the little monetary metal exploded in relative value, but it's still cheap versus gold. Very cheap historically. And we think it's going to regain some of its old norms at much higher percentage levels versus gold than we've seen so far. So neither the price of silver advanced nor the relationship to gold being depressed and recovering, neither of those have reached levels that make sense to us in terms of satisfaction.
What do you make of some quite prominent people in our industry who are vocal about the fact they sold all their position in silver at around 90 and, want to get, just say, I'll get back in when it's low again?
Well,
Any opinions there?
No opinions. I think too many analysts, including those who are friendly to gold and silver, fundamentally friendly, are using old metrics. Now, they're going back and looking at their charts, 1979 to 80 and 2010 to 11, and they're seeing these massive up moves, of course, confined in that old range. And yet they looked at their metrics that they might have on their quote screen, like let's say RSI, for example, a very popular free tool. Okay, it gets above 80 or something on a monthly close. Oh, that's overbought. Well, no old norms are going to be shattered in this move. Just like price has shattered the old 50 highs, you're going to break old norms of what is overbought. And we show this in annual momentum charts of silver and gold. What used to be the old highs, like the 2011 high and the 2020 surge high. And you look at momentum charts and you say, oh, see, they sort of capped at the same level. Well, we blew those off the page. So what the market has said is old notions of overbought are incorrect. And therefore, people who take profits based on that, for the moment, they feel wise. We're arguing no. Ultimately, they're going to have a real problem. Do they actually get back in? And if they get back in, do they get in better than where they got out? That's
well said. Well said.
Yeah.
Help me solve this mystery. I'm going to fire in the chart here of Shanghai silver price in dollars. As I'm looking now, there is a $30 spread. Michael, what in the world is going on here? Why?
Well,
Why?
We know the Chinese want silver. We know they want it as an industrial metal in particular. The Indians want it as a monetary metal. In fact, they're remonetizing silver as money. They've already done it. But China is the world's biggest producer of solar cells. And throughout the developing world, solar panels are very important. Because you don't have a local power plant, and you were a rural community in Africa or in South America somewhere. So therefore, having your own solar panel is essential for you to have your cell phone and all kinds of other things. And the Chinese have capitalized on that market. They produce like 80, 90% of that. And it's essential to have silver in the, forget what they call the tubes if going to the solar panels. And photovoltaic cells. Also, silver is essential in the AI industry and the expansion we're hearing about. It's here, there, and everywhere in high tech. Little bits, but everywhere. And therefore, it's not recycled either because it's there in small amounts and it's never worth recycling. So once it's gone, it's gone. You know what I mean? Demand there is overwhelming supply in both those categories.
Yep.
And it's not been satisfied for 5 years, and it's not being satisfied this year in terms of supply meeting demand. So that's why China probably has a premium. Plus, I think they've banned exports of silver And once they get it in there, it stays
Mhm.
there, So that could explain that. But that is not really the be all and end all of what this is about. The be all, and the Silver's a surfer, and he's riding on two waves. Now, right now, everybody knows about the industrial supply demand deficit. That's been made clear to investors. And so, and the China situation. But it's money. It's also the baby of gold. 3,000 years it's been that. Don't dismiss it. And when the world gets
Yeah.
shaken by this and that other event, like the decline in the dollar's reserve status versus other fiats, the questionable nature of U.S. government bonds, and especially Japanese bonds or UK bonds, these are crises bubbling on the edge. And the monetary metals know that. And they're not going to wait for the event to happen in this category or that category. They're already building in their anticipation of those events aren't going away. It's just a matter of when do they burst.
Exactly. And I want to get back to that point. When do they burst?
Yeah.
But I just think that, just to wrap on that Shanghai chart, it just is perfect proof why precious metals are meant to be held and not flipped. And also, Michael, any thoughts on some bullion dealers um, currently, because of the amount of physical silver entering the market, some are telling their clients they may receive approximately $10 to $15 per ounce below the spot price.
I no opinion on that issue. These supply-demand unique issues will pop up all along the way on the sidelines. Just like changes, for example, a lot of traders like to look at futures trading data, like commitment of traders or short positions and so forth. And all these things will come and go, and there'll be exciting points, or they might be negative points from time to time. But really, they're not part of the big process. And the big process is there's two waves that silver's on. One is the industrial one, but there's also, it's the money. That's the bigger wave underneath the monetary metals. And so silver's got, it's a double-barreled situation, whereas gold is unibarreled, okay? It's the money metal. But all these little factors that we can cite day to day that pop up as headlines or data points. Yeah, they're interesting, and some will be negative and some will be positive, but they're effectively noise in a much bigger situation.